Hey traders, this is Blake Morrow with Traders Summit. With me once again, I have Gareth Soloway from In the Money Stocks. How are you, Gareth?
I'm doing really well, Blake. Thanks for having me back.
It's nice to have you back. And I wanted to say, great call. Last time we spoke, it was back in about mid-September. You were pretty bearish equities at that point. We got like a 4.5%, maybe 5% move lower after our episode that we did. Then, the market's bottomed out. We're sitting at new highs. It's kind of like we found another range, but a higher range. And here we go into the end of 2021. I'm not sure if you believe in Santa, but are we going to get a Santa Claus rally? How do you feel about stocks now?
So I'm not much changed from last time. I'm still relatively bearish, maybe even a little bit more so, mainly because you have the Fed finally saying, okay, we are tapering. And in fact, they sped up the taper in their latest meeting. So I think last time we were on, there was no taper yet. They hadn't announced anything. And since then, they've said, okay, listen, we are going to start to withdraw some of this money that we're printing and pushing into the system. So I think they're doing $120 billion a month. They're going to take that all out by probably the end of the first quarter of 2022. So that's taking out 1.5 trillion over the course of a year from the equity markets, from the bond market, and it all filters through, right? Yeah. So there's got to be some give and take there where valuations have to adjust. And one of the things here, let me show my chart here. This is a pretty cool thing. So if we go to the S&P chart here, take a look. And this was when we talked last time, right? So you can see clearly this was kind of that last peak, and it's following this channel. It's a beautiful, beautiful channel, two parallel trend lines. And I think this is where we talked early. Then you had the dip in September here, and then we've kind of floated up. We made a new all-time high. We pulled back, and notice how we're coming down to this same trend line again. That's going to be the big test for this market. As long as the market can stay inside of this range, then inevitably you could float back up. The big concern for me is that at what point, when we hit this line over and over and over again, when do we break below it? And that's where you could enter a bear market period in the equity markets. And again, that's really what I'm kind of focusing on here. And my concern overall is, okay, well, we're starting to come in again. We now have a new piece of the puzzle that the Fed is tapering. Does that create the catalyst for a breakdown in this trend line? And trend lines, again, I'm a huge, major technical trader. I mean, that's really all I pay attention to. Yeah. So that's a big deal for me, that trend line.
Well, I understand what you're saying, and you got the macro backdrop, if you will, with the Fed really, reducing its liquidity measures that we've had in place, since COVID-19, really the initial, lockdowns, if you will. But still, I mean, central banks are still pretty loose at this point. But I know you follow technicals. We are making at least not a new high, so maybe there is scope to see a new low in the S&P. But are there anything else? Is there any other like indicators that you're looking at that might be bubbling beneath the surface, if you will, of the market?
Yeah. So, I mean, one of the things that I'm keeping a close eye on is the Omicron variant, right? And one of the reasons why I'm paying attention to it is not because it's, we've had COVID, we've had it, the country's been experiencing it for well over a year at this point, but it's the difference in what the Fed is doing, right? So in March of 2020, the markets had the big collapse and then rebounded and basically made new all-time highs for the entire year here, since that March 2020. So all the way through 2020 and then into 2021, where we are now. The difference here is that inflation back then was 2% or less, so they could print money to save the day. Now they're kind of boxed in, right? Because now, you just because it's getting bad again, you can't see them coming out and printing another $5 trillion or $10 trillion because it's going to create an inflationary issue with 10%, 12%, 20% inflation. And in fact, we've seen Jerome Powell turn much more hawkish. So I think that's an interesting little caveat to the difference with the Omicron variant versus the past COVID variants that were prior.
Now, do you have any views on the dollar right now? Because the dollar has been, it's been pretty strong, but we've been pulling back just a bit.
Yeah. So I do think that overall you're in a scenario where if things start to get a little bit harsher for the global equity markets, there will be a natural rotation to the dollar. In fact, that's probably why the dollar has been stronger over the last few months. But I think the long term, the macro of the dollar is just not good, right? You have to understand that as much as the Fed wants to get inflation under control, and they're going to try to, the end game is that at some point, the equity markets are going to fall enough. where they feel that they have to come out and get them back up because there's a chain reaction. Like I heard a stat recently that talked about how, 10 years ago, there was only a small percentage of people that were exposed to the stock market. It's gone up exponentially over the last few years, where so many people are invested that a drop in the stock market really creates a negation or a sucking out of the wealth effect. And then that can translate into people buying less, which translates into layoffs, which translates into higher unemployment, which ultimately gets the Fed saying, okay, well, our dual mandate is unemployment, keeping it low. We have to come out and rescue. So again, this is such an interesting period over the next couple of years because the Fed is now boxed in because we have inflation now, high inflation, but at the same time, what's going to happen when we have another crisis?
Yeah, no, a lot of times the dollar is used as a hedge, if you will, against some, you can call it risk aversion or whatnot. And maybe it's against certain types of currencies. And then you have like some of the commodity currencies or maybe emerging market currencies don't really perform all that well. And the dollar outperforms those. But on a broad basis, do you fear that if stocks do come under pressure, is the dollar going to be a recipient of that quote unquote risk off type of activity?
Yeah, I do think it will be, right? So I think in the near term, it will be. That's just how people have been programmed for the last 20, 40, so many years that the dollar has been the dominant currency in the world, the reserve currency. So I do think that fear is going to keep the dollar strong in the near term. How long does that last? I mean, at what point do things get so bad where the Fed comes out and just starts printing? The government continues to run up that debt. At some point, there's going to be kind of an inversion period where the dollar, then all of a sudden, people stop or start losing faith in the dollar. But I don't think that's in the very near term, especially if we're going into a more conservative market where the markets could fall.
So, we talked a little bit about the dollar and I'd love to get your views on precious metals. And we've seen precious metals, it looked like at the end of last week, we were going to get a rally following the FOMC. The gold market, took off. We broke 1800, we're slipping back below it. And it just, it seems like every time we get a leg up in gold and there's a lot of gold bulls out there, the market kind of falters. What are your feelings about precious metals here?
Yeah, so I'm actually a huge fan of especially gold, but I mean precious metals in general. But take a look at this chart, right? So you're exactly right. People have written off gold at this point. We have kind of seen gold just go sideways, basically for the last year, actually more than the last year, really going back to mid 2020 is when we put in that peak. But one of the things I always like to remind people is that this is the consolidation. This is the digestion of a bigger move. So if you go back to 2019, we had this big move up, right? From basically $1,200 on gold all the way to above 2,000. So, I mean, think about that percentage gain on gold, monstrous gain, not quite 100%, but not too far off either. And then since then you've consolidated, and consolidation, this is known as a bull flag on the larger time frame. And it's actually what a marathon runner. So like the analogy I love to use is, if you're a marathon runner or if you know someone who is, imagine them going for a marathon, which was the run from 2019 to 2020, and then turning around and saying, well, you have to run a full another one right now. Yeah. And the answer is, well, they probably can't, right? I mean, these things are exhausting. So what do? They have to refuel. They have to rest a little bit. And that's what gold's been doing. It's just been consolidating sideways, building a strong base. And it will eventually, in my opinion, break to the upside. This is a key line I'm watching right here. You can see how it's hammered on this line multiple times. And I do have a 2022 end of year price target of around $3,000 per ounce, which basically gives you almost that same move from 2019 to 2020.
Well, that'd be a huge gain. Now, talking about gold, and I guess we could also reference crypto at the same time, because a lot of people argue that one of the reasons why gold has really underperformed is you've seen emergence of alternative investments like cryptos, or NFTs, or just the money's being spread around. That same bucket of money that would be used in decades past in silver and gold and palladium, if you will, has really found its way into different alternative investments. So are you as constructive on cryptos, or do you see, if gold and silver, do rally, or other precious metals rally, is it going to be, at the expense of cryptos coming under pressure, or is there enough room for both?
Yeah, so I think longer term, there definitely is enough room for both. But you're right. I mean, anytime crypto gets so hot, and you have someone with like $100 or $1,000 or $10,000, they're going to go towards the hotter, sexier thing, right? So that happens to be cryptos, or it has been. I do think that we're entering a crypto bear market here. If you look at a lot of the altcoins are down 50, 60, 70%, not Ether, Solana, but a lot of the other ones like Cardano, seriously off of the highs. And we've seen Bitcoin come in significantly here as well. So I'm thinking that longer term, there's plenty of money for both gold and cryptocurrencies. If you think about, the crypto market is what, under 2 trillion in total assets. I mean, think about the amount that the Fed has pushed into the system alone. Think about what the government has, the debt that the government's run up by spending, and it dwarfs that number, obviously. So in the near term, let's take a look at the Bitcoin chart and just see what we have here. So when I look at the Bitcoin chart here, I clearly see a double top, right? So many people were so bullish that it was making a breakout up in this range. I never got on that bandwagon with this break or this break, mainly because you only had one significant close above each time. So it was almost like the institutional money or the big whales were dangling a carrot out, trying to get the small investor to get really, really bullish. And then the reversal has been huge here at this point. We're now trading at 46,500. But one of the concerns I have for the crypto market is that you're starting to repeat the same pattern that occurred in early 2021 here over here. And what I mean by that is, check this out. So you had this head and shoulders pattern, and it's just like a crazy replication, right? So here's your head and shoulders pattern, shoulder, head, and shoulder. And here's your neckline. And when you broke the neckline, you flushed all the way down to 30,000. Now you can find that calculated target. And I called this back then, I called that target a 30,000 target by taking the highest point of this head, drawing a plumb line down to this line, taking that entire distance and replicating it from the breakdown point. And you'll find that it's almost exactly a perfect measured move. And what's scary over here is you have another shoulder building, another head building. And is this the beginning of a shoulder starting to form? And if you have that, this is what freaks me out, or at least, listen, I'm not hugely long Bitcoin, but if this breaks, the measured move on this one has a downside target to like 17,000 or so, all the way down here. So listen, it may not play out. This is always the question. Will the pattern play out fully? How does it all play out? But you have to, as an investor, start to look at these things and saying, okay, let's be a little careful here. There's so much speculative money still in Bitcoin. I liken it to the .coms back in 99, 2000, where there was a major washout. I honestly think there has to be a major washout in crypto. And then you'll see Bitcoin finally become the asset that everyone wants it to be in the future.
Wow, that would be a lot of wealth destruction in the event that happened. But that did happen in the you and I both lived through the late 90s and mid 90s, and we've seen it firsthand. So it is. And
Blake, I would just like to say too, I mean, you lived through it. So you remember the hype with the .coms. Yep. I mean, people were buying .coms that were run out of their parents' basement. The value, I mean, it is almost identical to what's going on. And I always liken it too to how the internet in the late 90s was the new big thing, right? I mean, it was like, oh my goodness, the internet. I mean, I still remember dial-up with AOL, how it took like 5 minutes just to get online. I mean, this was just the emerging period where people could get online, the average person could. And here you have this new emerging technology, blockchain, where it's going to be changing the game of so many things. And it's like the parallels are a little spooky with how that ended up and how this is. And one other point is, if you look at the Amazon chart from 2000 when it topped out, it's almost identical to the Bitcoin chart right now. And Amazon went from over $100 to $5, and now it's at what, 3,300 or so. So the point is, if you're a bull in Bitcoin, there might be pain, but the long term, if it survives, is massive upside like Amazon. But you just have to realize that things don't go up in a straight line.
Yeah, and I like to remind people, if there are those parallels do exist, there are the Amazons of the world. There are the there are the Netflixes of the world. There are going to be the Mind Springs of the world too that didn't exist anymore. So that's also quite possible. Well, Gareth, I love your work. I love what you do. So as a trader, I'm sitting here watching you. How do I find out more about you?
Best place to do it is on Twitter. Follow me on Twitter. I tweet, a couple times a day, some interesting charts, some technical analysis, or some views. It's free. That's what I'm always about, just trying to give people kind of insight. And then if you really like that, verifiedinvestingcrypto.com is my new website for crypto, or inthemoneystocks.com for stocks.
Awesome. Well, guys and gals, you're watching Gareth, make sure you give him a thumbs up on YouTube, telling him how much you really appreciate his knowledge and his time. And Gareth, I want to thank you for joining us today. And I want to wish you and your family a Merry Christmas, Happy Holidays, Happy New Year. And I'm going to look to reach out to you in the first quarter of this next year to have you back again.
Yeah, I would love that, Blake. I'd love to rejoin you. We can look back on some of the talking today and see if anything panned out. And same thing. Thank you so much for having me, and Merry Christmas to you as well.
Our pleasure. And thanks for being here, and we'll talk to you next time. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.